Hello, welcome back to my channel. It's your girl Misha representing Straight Outer Trade with Misha, here to take you through today's breakdown, today's chart analysis. It has been long since I last interfaced here, but here I am. Before I take you through, I would like to share with you my mantra, which goes like success is my duty, obligation, and a responsibility. It is my duty to be successful. It is my responsibility and it is an obligation to me. No one is coming to save you. If you want something, represent yourself. Go get it. Work for it. Nothing good comes easy. Success is not overnight, it comes over time. Over time. Hope you get that. Over time. It is not a destination. It is a journey. It is not a sprint, it is a marathon. Consistent daily action leads to improvement. Work daily because it creates a rhythm. Don't be afraid to fail because it's from our mistakes that we learn, that we grow. No mistake, no growth. No one is perfect, and every business has got its own risks. So don't fear to take risks because risks are a part of growth and you can't move forward without any risks. So you must be willing to take on the risk, submit to the process, let yourself grow, allow yourself get the necessary experience. And there isn't any substitute for experience. Allow yourself to grow, allow yourself to become a very strong person mentally, physically, spiritually, and let your skill grow. So, I would like to take you through today's price action. Today is a Monday, 6th October 2025, and it's your girl Misha. I'll start from Asian session. This is a gold chart, gold US dollar, and as you well know that gold is so bullish. It is a bullish structure. It is a bullish trend, as you can see. It has been moving forward for decades. I would say for decades now. Gold is bullish. So this is a daily chart, and you can clearly see that it is really pushing higher. So let me check on the 4 hours. Well, this is a 4 hour. It's the same thing. So 4 hour, 1 hour, you can see it's the same thing. It has been pushing higher. So we are bullish on gold. And so I would start from the Asian session. Asian session usually starts at 8 p.m. That is New York local time. From 8 p.m. to midnight, New York local time, that is our Asian session. And that is the true day open. 8 p.m. New York local time, that is the true day open. Like the session begins there. Yeah, so I will take you through the chart. Just get a seat, tighten your seat belts. I'm going to dive in. So when I trace back into the Asian session at 8 p.m., this was Asian open here. You can clearly see that we opened at around here. But since order flow is bullish, I would be looking for the buy setups or for a continuation. So Friday closed around here. Then new day we had this volume imbalance. So we had a new week's open, steel price pushed up. You can clearly see that we opened around here, then we had a push up. So after that, price left a balance price range. Let me show you. This is a balance price range. So if you can clearly see that, that is a balance price range. So if want to participate into the buys, like the trend, to participate in the direction of the trend, in this case we are bullish. Asian open, we price traded back into this balanced price range, formed a swing low. It formed a swing low. This is a swing low. You can, let me first erase this. This is a swing low. You can clearly see that price formed a swing low inside a balance price range. So this balance price range means that if I go onto a lower time frame, lower than the 15 minutes, which I am working on right now, you will find an order block. Let me drop down onto the 5 minutes. We've been here. So do you see this? So the moment you see a balanced price range, just get to know that on the lower time frame, you'll find an order block. So it is a hidden order block on this 15 minutes. Yeah, you've seen the order block on the 5 minutes. Yeah. So we had price trade back into the balanced price range. You can call it a hidden base or a hidden order blocks in case you zoom down onto a lower time frame. Yeah, we formed a swing low. We had a little bit of a consolidation. You can clearly see that we had a little bit of a consolidation. Yes, so if I want to take on my entry, since we have already formed a swing low, I will just take on my buy with confidence that it is going to expand higher. So in this case, we had a little bit of a consolidation, and we can never go from a consolidation to a reversal or to a retracement. We go from a consolidation to an expansion. In this case, since the order flow is bullish, I don't expect price again to trade lower unless if it is a manipulation. Yes, so we had a little bit of a consolidation after a formation of a swing low. Then we had an expansion higher. So you can call this a break in market structure. A break in market structure. Then after that, break in market structure, price left a fair value gap. If you can look closely here, we had a fair value gap. So we had a little retracement into the fair value gap, and price respected the fair value gap by forming a swing low. When you look closely here, you can see that price dropped into this fair value gap that was formed freshly. Like if you're trading, trade using the current price action. Don't look in the past. Just trade the current price action. And this, in this case, price formed a new swing low. So this was a fresh structure. We formed a swing low inside a fair value gap. So the moment price forms a swing low, when we are bullish, expect an expansion or a continuation in that direction. So we formed a swing low inside a fair value gap. So that was an intermediate term swing low. Then if I want to participate still, since we formed a swing low, you can take on your buys. Then we had some good move from here. We had some good move from here. These were 230 pips before we had a retracement. So from here, this was London open. We had a retracement back into a discount of our range. Since we had an intermediate term low, we've had an expansion higher. So we had a return into the discount portion of our range. In this case, we had as in an intermediate swing low. We had this indecision candle, or you can call it a doji. So that was our area of support. Remember price expands from a support, like going higher. So we had an area of support, we had an intermediate swing low, we had a doji, then and a balance price range in here. So if you can look closely in here, still we had a tiny balance price range. So London open, we had price retrace back into our discount portion of the range. So You just take on. If you're not yet sure, you wait for the price to reverse, to establish a reversal. And in this case, after price hitting our support or our discount price point, we expected a turning point around here. So you wait for the price to again form a new structure. And in this case, we establish a new structure by forming a swing low. So after price hitting our discount price point, it formed a new swing low. You can clearly see that we formed a new swing low here. If you're not yet sure, you wait for price to establish valid setups. In this case, we had price trade higher, close above this last close candle, making this a change in state of delivery. And this our bullish order block. Price again left a fair value gap. You can see that this was a fair value gap, bullish order block, and a bullish breaker. So we had multiple PDRAs in this at this point. We had a bullish breaker, we had a bullish order block, and we had a fair value gap. So we had price trade back into the fair value gap, forming a new swing low, and we had that cute expansion higher. So if at all I take my entry here, stop loss, I can say maybe I want to risk 50 pips, and my target was this swing high. And in this case, if at all I took from here 160 pips or 150, stop loss 50 pips or 60, you can see from here up to around this point, my risk to reward ratio is or was 1 to 3. That is a very good risk to reward ratio. Yes, 1 to 3 is something good. So we had price trade back into the fair value gap. Then we had this huge, cute expansion higher, taking out this high. But what really happened after price taking out that high? I would call this as a break-in market structure. You can clearly see that we had price break higher and it closed above. So still it left an area of support, or you can call it a discount. So in this case, you look back in the discount, we had this bullish order block. We also had a balanced price range in here. Since we've had a break in market structure, I would wait for price to trade back into the discount portion of my price swing or price leg. Then I take on a buy. So price dropped back into a bullish order block. Then we had this expansion, but here we had a failure swing because by price trading back higher, it failed to take out this most recent swing high. So we could, this is called a failure swing. So we had this move, but price failed to displace higher. So after that, we had a change in state of delivery. Why is it a change in state of delivery? Because we had these two consecutive up close candles. They closed above this, but again price came and closed below them, making it a change in set of delivery, making these two consecutive up close candle our fresh new bearish order block. So the moment you see that, it implies that the order flow has changed. It has been moving for bullish, but it has now changed the sentiment or the direction at this particular moment in time. So we had a change in state of delivery. Price left a fair value gap. Then these two, that is our bearish order block. And this last down close, we could consider that as a bearish breaker, in this case, a bearish breaker. So we had price retrace back into the fair value gap, and we've had this candle moving well, and it also left a new, now since the order flow changed to a bearish one, and it really left a bearish order block. You can clearly see that order flow changed to a bearish one. Now it is moving lower. though it is kind of back and forth, that is why we are getting immediate mitigation of the order blocks. We had this order block which was left bearish, it was mitigated, favor gap rebalanced, then we've had this drop lower, and this bearish order block has been also mitigated. So but this particular moment in time, we've had price still trade back into, when you look here, this is a bearish, not a bearish, this is a bullish order block, and it is currently, it is rejecting off there. So the current price action, I would say it's not that clean because it is back and forth, as you can really see. It is back and forth, back and forth, back and forth. So it has reacted off this portion, then it is rejecting, it has rejected off here, return into the bearish order block. So allow me stop here before I close. Success is my duty, obligation, and a responsibility. No one is going to save you, not the government, not your mom, not your father, but you have to work for what you believe in. Don't focus on how long it's gonna take you. Just focus on the process, let yourself grow, let yourself develop, and remain Misha. Don't forget to subscribe to my channel. Peace and love.